Welcome to the Professionals of the Inland Empire show with your host, John Tulac.
Hello again, everyone, and welcome to Professionals of the Inland Empire, which by now, if you're a regular watcher or listener to this podcast, you know we affectionately call it PIE. Today, we're going to be interviewing two more experts in their fields, professionals who live and work in the Inland Empire, or at least one or the other, but they are available to you, the Inland Empire business person, to satisfy your business needs in a way that is outstanding. And I am very happy today to welcome to the podcast Margeaux Mernick and David Goodrich. Now, they are business attorneys, but they do business attorney work in very different ways. Margeaux is a business and corporate attorney, and David Goodrich is a bankruptcy attorney, because some things sometimes don't always work out. So sit back and relax the next half hour with your slice of pie, because here we go. Margeaux and David, welcome to the podcast. Margeaux, we're going to start with you. We'll focus on the positive side of business before we turn to the dark side with David. So tell us who you are, what you do, and how you do it.
Sure, no problem. Although, from time to time I do have some dark sides, but as far as who I am, Mernick Law is my law firm. I'm a solo practitioner who also has a couple of attorneys who work with me from time to time, and that is in the areas of business formation, all the way through to the exit. So the creating the business, getting advice on which structure you should form, and all those agreements that support those relationships between shareholders, members, partners, and even vendors and customers, because I do quite a bit of general counsel work for my clients once we get those things started. And on the exit side, it's succession planning, buy-sell agreements, depending on what the plan is, maybe some acquisition and sales. So that's a type of work that I do for clients, primarily in the Inland Empire, but all over the state of California. So, and then I think as far as background is concerned, 20 plus years experience in the area of working with closely held businesses. But I started out, my previous career, I worked for the Getty, which is an art-based institution. I thought I was going to be doing arts-based law, arts and entertainment. But in law school at Pepperdine, I became very interested in land use and environmental law, and ended up working with the city of Thousand Oaks and a boutique law firm in Calabasas. So spent a lot of time in Malibu doing that kind of work before I started work as a general counsel, doing more business law for my clients. And that's been happening for probably about this last 10 or 12 years.
Okay. Well, I've always been in a position to wonder and also admire those who went to Pepperdine, whether it's undergrad or graduate school or law school, because you're on top of that hill and you have this outstanding view. I don't know how anybody ever studies there.
Right.
You
Getting work
obviously
done.
do.
It was challenging, but that 360 degree almost, but at least 180 degree, 90 degree view of the ocean was, it was supportive actually. And I managed to get some work done. The Fridays at the beaches were the best though.
That's only after the first year, right? Yeah, you had time to do that.
Right. Well, actually, yeah, exactly. And then the next thing you know, I always made time for exercise because law school was stressful, and I do the same thing in my current work life. Because if I'm not healthy, then I can't get the work done. So
This is good for everybody to know that lawyers don't just put their nose to the grindstone and spend their time finding ways to get more billable hours. There's actually work-life balance that a lot of us have, and actually the better attorneys manage to find a good work-life balance, because that makes them more effective to do the legal work, as far as I'm concerned.
exactly. And then we don't have the issues with all the ethics.
Exactly. Yeah, I know that one. I know this part about.
Yeah, I think David runs every morning, so he gets that exercise in too. So yeah.
Excellent. You never know where these conversations are going to go. So, Mark, I want to go back to what you do, which basically starts with preparing the client well to get started in business because there are choices. And I know today that almost the default thinking is, oh, I'm going to start a new company, so I'll form an LLC. But that's not always the best option for a company, particularly one that may be looking at raising successive rounds of financing, especially from private equity, and they want to see a corporation, don't they?
Right, they do. And oftentimes a C corp for some of those who are thinking about future investments. But what I tell my clients is, and yes, they think LLC because they think it's the easiest, and oftentimes it's what the online services are telling them. But I also encourage most of my clients, we work with a team. So we have the CPA involved. We might have the wealth management folks involved, but I'm always talking with my client CPA. And most often, I don't work with clients who don't have a CPA, depending upon the size of the business. If it's a startup, then I would work with them to get that person in line. But for tax reasons, we're talking tax and liability issues that we're thinking about which entity we're going to form, and then what our future plans are, what kind of flexibility is required. Um, is my client in a position to handle the formalities that come with working with shareholders in a corporation? And some of those things are the things that I try to think about.
Yeah, and it may seem like it's dry, but these are all things that are important to think about up front because then operationally it's going to, in part, tell people how they have to do certain things. I mean, unless you're simply working for yourself by yourself, you're anticipating where you're going to go with this, and that's part of the planning. And it takes a team. You mentioned the CPA. You want to have a good bank and a good banker, and you need to have somebody who's going to take care of your insurance. Nobody can get a business started by himself or herself. Not anymore.
Exactly, exactly. And figuring those things out ahead of time and working with your um, shareholders or members, depending upon which entity you plan to form, is super important at the beginning. It's like I know folks don't like prenups in a marriage, but it's like the business prenup, and getting those documents in order, getting the ideas in order and the concepts about where you're planning to go, so you're on the same page with the other shareholders or members, and then deciding how you treat the relationship when you want to exit before, things are uh, negative,
Yes. Well, I
before
know
things get
people
dark.
people have heard of bylaws and they've heard of an operating agreement and they think they're really important. And yes, you have to have them, but that especially if it's more than one person starting up the company, it's that founders agreement or a founders agreement coupled with a shareholders agreement, like what happens if, who's putting what in, and so on. Those are really the critical documents that's going to shape that thing going forward and done well prevents a dispute from getting out of hand. It's like, okay, we can turn to this, as opposed to writing to the bylaws. Well, what could I use here? That usually doesn't work, does it?
Exactly, exactly. And also spending time to go through an operating agreement with my client or the shareholders agreement from front to back is something I've been doing really regularly, because I find that when I pass those on and my clients say, "Oh, yeah, I read it. Everything looks great." And if you wrote it, it's great. But no, let's go through it and have a good understanding about management and voting and all of those things, so that when it comes up in your board meetings and things like that, which direction you're heading. And everybody's a lot of times they think they've agreed to something until they see it in writing. So
Exactly. And if it's important to you in terms of expectations or who's going to do this, who's going to get that, it better be in writing. It can be on a piece of binder paper for all that it matters in terms of form sometimes, so long as the parties acknowledge it's real or have signed it. The formality isn't as important as getting it on paper.
exactly.
Yeah.
Even those deal terms. We could run with that if that's all you had. I prefer that that is not all you have, but
Yes, don't we all? And as long as I'm on that subject, certainly we've been dealing with the ill effects as well as some of the good effects of LegalZoom and Rocket Lawyer and those other kinds of services online where you can get access to a lot of form and fill in the blanks, but if you don't know how to fill in the blanks, you can create a really stupid document. It takes real experience. It takes real expertise to sort out which is the right form and how that form should be prepared. That's why, trying to cut corners, especially in startup and not using a lawyer, is so foolish.
right. And then we have to end up cleaning it up later. I'm amending the filings with the Secretary of State, or explaining that it's important to decide the value of the company when you do have value, so that when you're distributing your shares, there's a relationship between the two of them. And I find a lot of times with folks who form corporations, they've never issued shares and don't understand it. So educating clients is super important to me. And that's why I work with closely held businesses, because you get that time where you can really educate them, and they can work together a lot smoother, less disputes, lower liability exposure. So.
Right. I mean, we are supposed to, if there are membership and members have membership interests, we have to document that somehow. We think of shares and you order a minute book, you get share certificate. So fill it out and sign the darn things and put them back in the minute book. It's ministerial. It isn't hard, but it's really easy to be sloppy and not do things like that. And then, as soon as you say, you start getting into tough times and everybody starts pointing the fingers at each other. Where's the base? Where's the foundation? It's not there. Yeah, and people seem
Exactly.
to misremember things. And then before you
Misremembering.
know it, you have to go visit David. Let's turn to David because, one of those Rocket, Zoom, legal lawyer, whatever they're called, forums went south, and now the company's in bad shape. And so now they have to come to a bankruptcy attorney for some advice, whether or not that's even going to be valuable for them to do. So, David, tell us who you are, what you do, and how you do it. And then we'll get into some of the bankruptcy choices that a company may have to make under tough circumstances.
Well, thanks for having me, John. It's interesting you paired me up with Margeaux, because somebody like Margeaux, more likely than not, is going to prevent companies from having to visit with me. A common thread for most companies that need bankruptcy is disorganization. Corporate documents are a disaster. Financial records are worse. And so it just a little bit of planning and a high level of organization seems to be a pretty important ingredient for any business trying to keep itself out of bankruptcy. So a little bit about me. I'm a bankruptcy lawyer. I've done bankruptcy for 26 years. I'm a legal specialist certified by the state of California in bankruptcy law. I started out at a middle-sized firm, did a lot of work for banks. And then when I was probably foolish and young, I decided to start my own law firm in 2007. And shortly after that, I became a United States bankruptcy trustee, appointed in the LA division of the U.S. Bankruptcy Court. I get about 60 to 80 cases a month that are assigned to me. So I marshal those cases and their assets through bankruptcy. Most of them are very simple. Some are very complicated. I also represent medium to large size businesses in Chapter 11. Occasionally we'll file Chapter 7 for companies, depending on the need and the desire of the company. I'm a graduate of the mighty University of Arizona. We're right in the middle of college basketball season, so it's my favorite time of year. Not so excited when it's football season because our football team always is terrible. And I'm also very proud to announce today that my son is going to the University of Arizona starting in the fall. He will be the third generation in the family to go.
Fantastic.
And as Margeaux pointed out, I too exercise religiously. Every morning I get up at 5 a.m. I run for an hour. On weekends, depending on the stress level, it can be anywhere between 5 miles and 20 miles. It just depends. And those are on a Saturday usually. It is the time that I unfortunately spend to help unwind, but it also gets my thoughts organized. I highly recommend it for those who do not have a routine to get away from your phone, to get away from your TV, to do something like that. It's amazing the solutions your brain comes up with when it's not being distracted. You're actually focused on, so sometimes I'm not focused on anything, focused on not falling over or getting run over by a car, but I also find solutions to clients during those times. And I never bill my clients for that time.
I
Although
wondered about that.
yeah, I wonder if you should. Ethically, I don't know the answer, but so I think at least my clients benefit from the time I spend running because a lot of things get solved, or at least I come up with some ideas during those runs. So that's a little bit about me. I'm a partner in a firm in Orange County. It's Golden Goodrich. My partner, Jeff Golden, is also a bankruptcy trustee. That's kind of how we met. We are the only firm in Orange County, probably in the state, that can say both of its partners are recognized as award-winning bankruptcy trustees and lawyers. We both won the Peter Elliott Award of Excellence in the Orange County Bankruptcy Forum. It's a very unique award. They give it out every other year. They've only given out, I think, 12 in the history of the organization. And then we both won Trustee of the Year. It's the Central District Bankruptcy Association Attorney, something like that. There's a long name. The acronym I always mess up. But we've also both won that award. I don't think there's any other firm in all of California that can say they have two lawyers that have won both awards.
That is mighty darn impressive. Congratulations. And it does make a difference, folks, that when peers recognize peers, when fellow attorneys recognize attorneys for the work that they do, that tells you something. And there are various services that do that. Super Lawyer, you may have heard of, that's become pretty popular, especially in Southern California as a reporting service. The granddaddy of them all is Martindale-Hubbell Law Directory, which didn't make the transition to the digital age quite as successfully as others, but of course it's still around and it's still rating lawyers through peer review and so on. So yes, those kinds of accolades do actually matter, and you know, it's impressive when lawyers earn those recognitions from their fellow lawyers. So very good. Yeah, I've never gotten very far with a line item on the billing that says thinking about your case and then a figure. But let's explore that just a little bit more as long as I brought it up, because that's what lawyers have to do their work. You don't just turn to a law book or today LexisNexis or Westlaw and say, well, I'm going to find your answer. You have to set up the question. And at least people now who are working with AI realize, you know, a dumb question gets you less than an ideal answer. So you have to spend some time framing your question. Well, sometimes that's what we have to do with clients, is we have to frame what has been told to us in terms of researchable questions or things that can make us think about what the options are. Like Margeaux says, with respect to startup, what David might advise a company with respect to, will Chapter 11 really help me in the long run? Is that a good strategy, or should I just pull the plug and go down the drain with a 7? You know, we have to have facts. And then we have to be able to frame the issues so that we can give you good advice. So David, you know, when people come to you, we know they're stressed. Their business is in trouble. How do you help them understand what their choices are?
It depends on when they come to us in the kind of the timeline of their business. A lot of people think of bankruptcy as the business is closing, and it's quite a misnomer. I'd say 90% of the cases we handle, the business is not closing. It just needs to be financially restructured. And what does that look like? Sometimes it depends on when the company comes to us. If the company comes to us and gives us time to plan, sometimes it's a workout without a bankruptcy, where we're talking to creditors and explaining, if a bankruptcy is filed, this is what happens to you. Perhaps there's a settlement that can be done to avoid the cost of the bank, because bankruptcies are not cheap. To avoid the cost of the bankruptcy, get you the maximum amount of money that you would get in a bankruptcy and avoid the whole thing. But sometimes companies come to us and it's on the eve of something terrible. Frequently, either there's going to be a levy of bank accounts, which means that the sheriff is going to come to the company's bank, let's say in the morning, and drain all of the money out of the bank account. Or there's a building that's in foreclosure, or these days there's something called a merchant cash advance lender, which they call them MCAs. MCAs lend cash on a very loose basis. Like if you can fog a mirror, you can get a loan from an MCA, but the downside is the interest can be 100 and something percent on a, I think it's a monthly basis. And also there's an assignment of your receivables to that company. And when they feel you're not going to pay, they just step in and take all of your receivables from your clients, which means it's impossible to operate unless you have money elsewhere that can fund payroll and fund rent and things like that. So sometimes that's happening where there is no choice. Payroll's tomorrow. We need to file bankruptcy to be able to get the money away from the MCA and pay our payroll. So John, it really matters, like I said, about when the company comes to us. And it's really, in my opinion, very important to come early. The more time you can have to plan a bankruptcy, the better. When you rush into a bankruptcy, the first thing that happens in Chapter 11 are there are a series of motions that get filed and they're heard immediately. Because once you're in bankruptcy, at least in Chapter 11, you have to have permission to do anything. And so those motions are very complicated. They take sometimes 4 to 6 to 8 hours each to prepare. And if you say, well, tomorrow's the day that something's going to happen and we have to file the Chapter 11 today, we're not ready for tomorrow. And so payroll might be delayed and you may not pay your vendors and things like that. It also, timing's key. If you can pay like your payroll and then file bankruptcy, you bought yourself, in most circumstances, 2 weeks till your next payroll. And so you have 2 weeks to get it all sorted out with the court so you have authority to pay payroll. So hopefully I answer your question, but ideally, you're coming when things are starting to become problematic as far as cash flow. It's usually a cash flow thing. Or something has happened recently with an asset that we can try to reverse. Bankruptcy is really good about recapturing assets. Something that a property goes to foreclosure, if the gavel has hit and the foreclosure is done, you pretty much lost the asset. But a lot of other things can be recouped from creditors, third parties, things like that.
So was it Hemingway? Somebody wrote that, or Fitzgerald. Somebody said, gradually bankruptcy comes on gradually, then suddenly. And so,
Yeah,
I always thought that was just a great line. So
That's sad,
you
actually.
should. I guess what David is saying, you get some sense that the freight train is aimed in your direction. You need to get off the tracks. I want to go back to the idea, Margeaux, of actually, I'm just still kind of appalled by MCAs charging more than Louis the Loan Shark on a street corner. That's really pretty bad. But Margeaux, I want to go back to a related concept about planning in advance, and that's the idea of legal capitalization. I think that's one of the most misunderstood things from people starting up a company. And I have found in talking with lawyers, even lawyers that do some business work, that they don't seem to understand the concept of what constitutes proper capitalization of a company. So why don't you give us a quick tutorial on that one? Because it's going to tie directly back to some of the things that David sees.
Well, for most of my clients with startups, in fact, I just had an issue where I had clients who were working with an investor. They were starting a holding company to hold current assets and then some future assets. And the investor, they had gotten a valuation, but from someone that the investor knew. My client didn't come to me until after all these things had happened. And they had not, the valuation that the investor had determined was not appropriate. They needed capital that would fund their existing business, as well as the future businesses that they were planning on operating. And in addition to that, they needed to multiply that to deal with the market circumstances. This is hospitality, cafe, restaurant, bar type of business. which can go up and down quite a bit in regard to sales and customers. So for them, determining one, like I said, what they needed for the existing business. If you're a startup, you're looking for at least, I would say, if you're looking at all the expenses that are required, if you can do 2 to 3 times that amount in capital and be capitalized in that way, that's perfect. Most of the time, my clients aren't capitalized to that extent. And that's where we start to have some issues. And in this particular client that I'm talking about, they also didn't tell me that the investment was meant to capitalize some of their existing business operations, not just the future. So then when the investor couldn't come up with all the capital, guess what? They're in this big problem because they're undercapitalized. And we didn't know that at the beginning, in which case I would have looked for a lot more verification of the existing capital that he was planning to give, right? So that's the kind of uh, capitalization that I look to my clients to bring about. Whether we can always do that is another issue, but I try to work with them on multiple resources as well, so that they're not depending on only one way to capitalize the company.
Right. So I like the idea of that kind of a cushion, 2 or 3 times what it takes to open the doors. My rule is always you have to have enough capital to be able to open the doors and to continue to operate until you reach at least break-even point, and then you should have some kind of a cushion on top of that to be safe. And then once you get through the first year, there is a rebuttable presumption that you've been legally capitalized if you're still in business. But so many businesses fail in the first year or two that they risk that corporate veil being pierced, and they can be personally liable, which is not the kind of bankruptcy work that David does with individuals and the need for a 7, an 11 or doubles or 13 for an individual. I was playing Monopoly there for a minute. But you can see the bookend effect here. That if you're not probably capitalized, sooner or later, you may be having a conversation with a bankruptcy attorney, right, David?
Or multiple conversations. What frequently pops up are companies that have shareholders or other types of owners who have personally guaranteed the lion's share of the debt. And so the company could go through a Chapter 11 and reorganize, but that leaves the person who guaranteed the debt holding the bag, because that lender still has full recourse against that individual or multiple individuals. And so what frequently you see are companies that have to file Chapter 11 and individuals that file either Chapter 7, which is a liquidation, which means that any assets that aren't protected by available exemptions get sold by a bankruptcy trustee, or Chapter 11 of that individual, which is a very expensive process, or maybe a Chapter 13, which John identified. That's a lot, not as expensive, but it's a little bit complicated of a case, and it lasts 5 years. And so you're paying your creditors back over 5 years. So it's one of those things, if you're undercapitalized, you may be putting your own assets in the line of fire, not just because of alter ego claims, which are claims that could be pinned on you personally, but also you may be guaranteeing debt that eventually that lender is going to come looking to you to make whole.
Exactly. And recently I was working with a client who we had included provisions that required that the other members make sure that they were there to help with whatever income needed to be paid for all of the bill or expenses that had come out of a bankruptcy. So if they had personally guaranteed debt, then their operating agreement required that the other members, if that particular member had to guarantee some debt for the company, that they then had to come back and make that member whole, irrespective of what else was going on. And so luckily, they did not have to go to court to argue about that particular provision, but that was helpful. And I try to include those and other provisions that, like deadlock provisions, sometimes that have caused some problems with clients making decisions about how they proceed when they're heading towards bankruptcy.
All right. Well, as you can see, the time flies by when we're having fun and get into a couple of topics. But there was a lot of good information here today, ladies and gentlemen, from our two experts and provisors in the Inland Empire, in Margeaux Mernick and in David Goodrich. We'll be back with another episode in another week, but that's it for now. I want to thank Margeaux and David for being my guests, and we'll see you again soon. So long for now.
Thanks for watching or listening to, depending on the case, the Professionals of the Inland Empire show with your host, John W. Tulac. If you have a suggestion for a guest, email him at jwtulac, that's JWTULAC, @gmail.com. jwtulac @gmail.com.